Hi everyone, it's Wednesday the 8th of June and it's the day after the RBA put their hands up and said we got it wrong. And we know they got it wrong because they've accelerated the rate rise to try and control inflation. So do you remember a few months ago we kept saying month after month the RBA made it clear they're not going to increase rates until the middle of 2023. And then last month they said, listen, need to get back to business as usual. So a 0.25 rate rise, and that's the figure that everyone's used to when rates are moving. So it's going to be business as usual. And then a whole 1 month later, business as usual is out the window and it's now 0.5. And if you read the statement, and I have, they're making it crystal clear they're going to go again, and they'll probably go 0.4, 0.5 next time. They're playing catch up. They've left it too late in many respects. They perhaps should have gone much earlier. The key driver is inflation. So inflation is just the price at which the cost of goods and services is rising, and everybody's seen the figure 5%. So that's how much things are rising, and in many respects much greater than that. So if you're anything like us, we received a text during the week from our energy provider asking us to leave. Okay, so we know prices are in certain sectors are rising much more than 5%, but it's that figure that they're concerned about. Now, technically, the next official inflation data isn't due out until the end of July. Okay, and the RBA meet on the first Tuesday of every month. So technically, the next meeting will be before the next release of official data. But if they know what's going to come around the corner, they'll act again. So rate rises are going to be happening quickly now, remembering that they're still at historical lows. Okay, we're still coming out of this emergency setting as a result of the pandemic, and now as a result of what's happening here, what's happening globally, we're seeing rate rises increasing around the world. So what can you do? So we discussed this last time. Fixed rates are probably gone in many respects. So whether you go variable or whether you go fixed, the chances are you're going to end up paying exactly the same amount to the bank over a 2 or 3 year period. In fact, you might pay a little bit less if you stay variable. So regardless of how you structure it, the bank will get the same, and that's no surprise. The bank always wins, right? What matters is how you want to pay the bank. So if you want the certainty that you'll know exactly how much you're going to be paying over the next 2 or 3 years, you would go fixed. If you're happy to go with the flow, you'd go variable, and if you want a bit of both, you would split your loan. But ultimately, you'll probably pay exactly the same amount to the bank. That's the way it works. So the key thing I'd say is get out a spreadsheet, dust off that household budget you look at once every 2 years, and review all your numbers, because the cost of goods and services is clearly rising. Okay, focus on what your net surplus is every month. You hopefully should still be saving, given that rates are still so low, albeit rising, but focus on those numbers. Work bottom up, and that will give you some comfort around your own personal position. I don't think there's any need whatsoever for most households in this country to panic. Right, first, because rates are still super low, and secondly, when anyone's been borrowing, the banks have been using a fairly significant buffer in determining how much they think you can afford. Okay, we have been achieving massive dollar savings for clients in the last month, absolutely massive, thousands and thousands and thousands of dollars across a whole number of clients. If you want some help, you want to talk to us, just reach out. We're here. One last thing, I'm on holiday from the 20th of June, away for 3 weeks. I will look at some sneaky emails from time to time when Robin's not looking, but the team's here, and if I need to get involved in anything whilst I'm away, I will. Okay, have a great rest of the month.